Welcome to Nasdaq Sector Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Josh Ellman. He's a consumer analyst with Nasdaq IR Intelligence, and we're going to come into the thick of consumer earnings this week. Josh, thanks so much for joining us at MarketSite. Looks like you are going to have a busy week, but before we get into your outlook, the bright spot in the market really has been the strength of the consumer.
Yeah, we've actually seen a comeback, if you will, of the U.S. consumer. We started off the year a little choppy when it came to overall consumer spending, but we've seen a nice rebound in overall consumer spending, especially in March. We just got some recent data on that. I think there are a lot of factors at play here, but number one, you just take a look at the U.S. stock market and a lot of other asset classes. We've had a blockbuster 2019 to start the year, and I think the consumer is feeling better about his or her portfolio. So when they open up their stock portfolios, they see they're a little bit wealthier and feel a little bit more confident to go out and spend their dollars at discretionary spots. So I think that's one bright point. Number two, we've seen a little bit of a rebound in the real estate market. We've had the Federal Reserve more or less move to the sidelines. As a result, mortgage rates have tricked down, and we've seen a little bit of an increase from some of the malaise of the U.S. housing sector. So I think that is also another sign why consumers are feeling more confident. And then if you just look at the confidence numbers in general, you can see that the confidence projections and figures that are coming in for April of late have been much better than what we had in the start of the year. So all in all, the consumer is headed in the right direction, and the trajectory is pretty positive.
So you have to have been encouraged by the GDP numbers, considering consumer spend is nearly 70% of GDP?
So in terms of GDP, it wasn't all. I know the headline
Right.
number was 3.2, which is one of the best first quarters that we've had in a few years. But if you look in the weeds of that particular number, consumer spending was actually rather lackluster, and I think that ties to some of the weakness we saw in the early months of the year. Also, too, if you look at what was going on in terms of the improvement in GDP or the number in GDP, you had inventory builds and you had some exports as well. So I think ultimately, the consumer spending factor of that GDP report wasn't as strong as what everyone was anticipating.
Are there any headwinds for the consumer that you're looking at?
Yes, absolutely. So I think right now that we're really focused on gas prices. We've seen a sharp uptick in gas prices. I think the national average is about $2.89 now, and that's up substantially from the start of the year. So I think that's going to be a headwind for U.S. consumers. I also think, too, you have some issues around some of the geopolitical noise, trade tariffs, et cetera, so that could be weighing on U.S. consumer sentiment and spending in the future. And then also, the U.S. consumer has just had a blockbuster last few years, so ultimately I think how much more can he or she spend those dollars is really a wait-and-see approach. So I think that's ultimately where we stand in terms of headwinds for the U.S. consumer.
All right, next couple of weeks, it's going to be busy for you with earnings. What's your outlook for the retailers?
It's going to be an interesting quarter for retail. So we are lapping last year's tax reform, and I'm interested in hearing what a lot of these companies are going to say about their forecast for the second quarter and the year moving forward as we come across last year's tax reform. Also, too, I'm really interested, and we touched on inventory builds a little bit. I'm really interested to hear what companies are doing from an inventory build standpoint. We did see that increase in the GDP report, and I'm wondering if companies are building up their inventories ahead of any potential noise around the U.S. trade deal with China,
right,
if there are any issues around that. And then I'm also looking at gross margins, how companies have been promotional to attract U.S. consumers to their stores or to their websites in order to get them to shop. So I think those are three key areas that I'm looking at. And then one final item that I'm thinking about is just store closures. So we had recent employment data, which has shown now that we've had 3 consecutive months of a drop in employment for U.S. Retail, and I'm wondering if retailers are continuing to close stores at a fast standpoint. So I think that's another area that I'm looking at.
And to wrap up here, retail is kind of the story of the haves and the have-nots. Is there one area, whether it's discretionary or staples, that you're more bullish on, or you think that is going to outperform other areas of the sector?
Well, discretionary the last few years has been very, very strong, so I think there's a little bit of a catch-up with consumer staples. But if we do get some volatility, we get some negative headlines, whether that's around the U.S.-China deal or anything else, I think investors will start to look more closely at U.S. consumer staple companies, because they are very dividend paying oriented, and obviously are a little bit more defensive when it comes to volatility.
All right, Josh, thank you so much. We'll catch up with you in a couple of weeks to see how earnings season turned out.
Yep.
Thank you for joining me on Sector Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.